Welcome to Focus on the Five, conversations with Baldwin County business leaders and entrepreneurs, brought to you by Josh Knoll of Gulf Coast Financial Advisors. And now, Josh Knoll.
All right. Hello, everybody. Welcome to Focus on the Five. Glad you could join us today. I am Josh Knoll. I'm with Gulf Coast Financial Advisors, located here in downtown Fairhope, Alabama. I am joined today by Mr. Jay Stubbs of First Protective. Jay, if you'd like to introduce yourself real quick.
Good morning, everybody. I hope everybody's doing great. This is the middle of summer, staying hot and staying dry.
Yes, sir. Well, what Jay and I are going to talk about today is we're going to dive into life insurance, and it's going to be a little different discussion than what most folks are used to. Usually when someone brings up life insurance, it's in a long, drawn-out chart, hands on a chart, drawing numbers and things like that. Jay and I are going to dive into it a little bit different today. And the reason that we are discussing life insurance is, as Jay and I have talked at length about, there's really three things that need to get addressed when you're in the accumulation phase of your financial plan. One is if you decide someday you don't want to work anymore, you want to retire, sell the business, whatever it may be, where does that replacement check come from and how much is it? The second thing is, what if you become unable to work, you get sick, you get hurt, or maybe you can't take care of yourself? Where does that check come from and how much is it? And then the third thing is you die and you got people that depend on you, be it spouse, be it kids, be it a business partner. You got somebody dependent on you being there and being able to be productive, and now you're gone. Well, where's the replacement check come from? How much is it? And so that's what we're going to talk about today, but we're going to be pretty specific on that topic. We're not just going to be a broad stroke discussion about life insurance. We're going to drill down on some very efficient and, in my opinion, kind of more cutting edge ways of looking at life insurance. So Jay and I first, we're going to start out. Jay, I'd like to ask you, because I have my own opinions, what do you think the top reasons are people hesitate to get life insurance?
Well, if we look at LIMRA, which stands for Life Insurance Marketing Research Association, They do the national statistics. They tell us that the top three reasons that individuals don't go through with the transaction of a life insurance product is A, they think it's too expensive.
Right.
They hear the $1 million and they think $1 million of life insurance, that's going to cost a ton of money.
Right.
Well, that's incorrect. The second thing would be that they are underwriting challenges. They don't want to go through the hassle of getting approved in underwriting. Some people think that they, maybe a little scared, white coat syndrome.
White coat being the doctor or the nurse.
The nurse coming by and doing the paramedical exam, the blood draw.
The needle.
The needle.
I hate needles.
So some people don't do it because of that process that it's going to take.
Right.
It's A, too expensive, or B, I'm not comfortable with the process. And then the third reason that LIMRA would say is they don't know who to ask or who to go to.
Where to start.
Yeah.
Right. Yeah, and especially, I've had several cases where folks are thinking that it is going to be a very long and very drawn out, and honestly, sometimes I think they think it's going to be a painful process, right?
Yeah.
So what we're going to talk about today, I'm pretty excited about. Traditionally, let's address the second thing you said. Traditionally, there are ways to get around having the white coat, blood draw, exams, things like that.
Right.
But no, how if someone wanted to get life insurance traditionally, what options would they have to get around those exam requirements?
So if they didn't want to go through the underwriting process of doing a blood draw and bodily fluids and having a nurse come to their business or their home and go through that paramedical process, they can choose what's called simplified issue.
All right.
Simplified issue is a specific product, and there are lots of companies out there that offer simplified issue term, simplified issue permanent, such as whole life or universal life.
All right. Well, and what about group? What about at work?
Yeah, well, if you have group coverage through your employer, that's always going to be a guaranteed issue. Typically, they're going to give you a certain percentage of your salary, or salary times 2, times 3, times 4. It's going to be priced on a group model, and it's going to be deducted from your paycheck every week or every other week or every month.
All right, so
but it's a guaranteed issue face amount because they've gone to the group or the pool of employees,
right,
and they know that their risk there is going to be small.
So let's address two things there, because you mentioned price, and you mentioned the guaranteed issue. If I'm someone that traditionally wants to get life insurance, doesn't want to mess with exams, looking for the easiest, fastest road I could, well then I'm hopefully my employer offers something.
Yes.
Or I look out at simplified issue products.
Correct.
But I buy this insurance. There's going to be a couple limiting factors there, correct?
Yes.
One is traditionally there's been some limit on the amount of coverage I could get.
Yeah. So your group coverage you would get through your work,
right?
You're going to be 1, 2, 3, 4 times your salary. So if you make $50,000 a year, your coverage may only be $50, $100, $250, $300,000 of death benefit coverage. But it's easy to get because you check a few boxes, write down some beneficiaries, sign the paperwork, turn it in, and as long as you're with that company, that coverage is in force.
While you're with that company.
While you're with that company, that coverage is in force.
What happens typically when you leave? I know there's different options. But
yeah, more often than not, it's not a portable product.
Right.
You cannot take that with you.
Or it's age banded.
Correct.
Which is a whole nother rabbit hole to get down. All right, so I've got 2 to 3 times salary.
Yeah.
Right. So I can tell you, here I am. I'm 43, married with kids. 2 to 3 times salary is not going to be enough for me.
Right.
All right. So that's one limiting factor, and I'm probably not. I'm not abnormal for a regular average working American. What if I look around? I mean, this no offense to people I work with, but I look around the people. You look at me, or Jen, my wife. She's like, well, I don't want to be rated like him.
Right.
So, am I rated? Are we all rated in the same?
No, we're not all rated in the same. If you go into simplified issue, they're going to do it based on your age.
All right.
They're going to do it based on your sex, male or female.
Okay.
They're going to do it based on your smoker status or your tobacco use status.
Okay.
They're also going to do it based on your family history, your personal health history.
All right.
They're going to ask you some questions in that regard. But if you don't want to go through traditional underwriting, blood, bodily fluids, paramed exam, and you just want to answer some questions based on your history, your family history, your height, your weight, your tobacco use, and all of that, then you can get the simplified issue product up to a certain face amount.
Okay. And now we're still referring to group coverage, correct?
No, we're not. We've shifted gears because you've said, okay, I don't have enough. This group plan doesn't give me enough coverage for me and my family.
Right.
I need to now go explore other options to increase the amount of life insurance coverage I have for my overall financial plan.
So I've still got simplified issue options on an individual level.
You do. You do. Simplified issue meaning you still go through a underwriting screening process, but you don't have to have a nurse come and see you to do the blood draw and the bodily fluids and the height and the weight and the blood pressure check.
Okay. Now I've been doing this long enough to know that there's always a give and take to this.
There is.
All right. So I am who I am, 43 years old, wife, kids, and I go out there, I don't want to mess with the exams, things like that. I go simplified issue, and I am told that I can get up to what?
You can typically get up to 400,000. Some companies are 250.
All right.
But if you're in the specific ages of say 18 to 65,
okay,
and you're looking for a term plan to go on top of your group coverage, and you're between 18 and 65, a company will give you 50, 100,000, 250. A couple of companies even up to 400,000 of coverage.
Up to 400. All right.
Simplified issue.
Simplified issue. So that sounds reasonable, right?
Right.
But if I'm looking at 400,000, let's say I'm a healthy person, and I'm looking at my simplified issue rates on 400,000, how would that compare if I could have went to the trouble of going through underwriting and gotten preferred rates?
They're going to be higher rates.
They're going to be higher rates.
The companies give you the luxury of simplified issue, but you're paying for it in your rate.
That's the give and the take.
Correct.
All right.
Whereas if you decided, hey, well, I'm okay with needles. I'm okay with doing a blood draw. I'm okay with a nurse coming by and doing my height and weight and my blood pressure and answering some medical questions on my personal health history, then you could actually get the best rates in the industry, what we call preferred best. Right. Or sometimes just preferred. Some other companies call it select preferred. But if you're willing to do that blood draw and the nurse visit, then you can get the most inexpensive rates on a monthly premium, quarterly, or annual premium basis for a lot more coverage than $400,000.
All right. So before we go down, that's fully underwritten.
That's what we call fully underwritten.
So before we go down that road, here's my question. When I go to buy a gallon of milk, I know that if I go to the gas station, I'm going to pay more than if I went to Walmart.
Correct.
Because I'm paying more for the convenience of walking in and walking right back out with it, right?
Correct.
So what you're telling me is on the simplified issue, individual or group, but let's focus on the individual. In exchange for the convenience of me not having to go through all the exams, all the headache of that, in exchange, I pay a higher rate for the same amount of coverage.
You do.
Okay. All right. So then what you're telling me, if I'm reasonably healthy, very healthy, reasonably healthy, where it may be, and I don't see, I think, you know what, Jay? I don't mind the trouble of buying the milk inside the grocery store. So now I'm going to be looking at, you're telling me that I can get the milk cheaper if I'm willing to walk to the back of the store, get it, go through self-checkout because Walmart has no live personnel anymore. But I'm willing to go through that. That is called fully underwritten.
That is.
So what typically is involved, just in broad strokes, what's typically involved in a fully underwritten product?
Used to be you'd have an insurance professional come and visit with you. They do a needs analysis and determine the amount of coverage you need.
Right.
Again, this is to complement what you might have through your employer.
Right.
And then if you determine that amount is, say, $500,000, and you determine that term insurance, and based on your needs, you need it for the next 20 years.
Right.
Then you would do an application. You would actually fill out an application.
Hopefully electronically.
Well, it used to be handout.
Oh, I know.
Now we were in the age
we used to chisel it in stone.
Now we're in an age of we can actually transact applications without the client ever
Right.
coming into the office or us having to bother them by going to their home or their place.
Big
of
fan of
business.
that.
Yep.
Okay.
So once you do that, then the paperwork is submitted to the company, and the paramed exam would be scheduled. That's the nurse scheduled to come visit that potential insured
Right.
to go through the blood draw and the urine specimen, bodily fluids, and answer the medical questions,
Right.
get on the scale, and do the blood pressure check.
And I think it behooves us to point out that there is an underwriting guidance chart
Yes.
that tells us when those things are applicable to somebody. It depends on their age and the amount of face coverage.
Correct.
So not to get overly broad, but a 25-year-old may not necessarily have to do a blood draw on a fully written product at a certain face and below.
You, Josh, bring up a great point and a change that we are seeing in our industry today.
Okay.
I know of at least 10 life insurance companies now that say, hey, you're a pretty healthy guy or gal. Your prescription medications are either non-existent because you don't have anything going on with you, or they're very basic stuff that you've had on your prescription history.
Right.
Your health history is good, meaning you have no major ailments that you've had to deal with. The four I like to think of are cardiac, cancer, stroke, and diabetes.
Right.
There's some other things, checklists of boxes that if you don't have anything going on with you in your health history, you would be deemed to qualify for what they call JET issue,
All
or
right.
accelerated issue.
Now we're talking. All right, so you're telling me, now this is, roughly how long has jet issue options been around?
We've seen them come around about 2 years ago, and
Okay.
they've really blossomed in the last 6 months to a year.
Do you think they have blossomed in part because of the amount of electronic data that is available out there to look over?
Absolutely.
All right.
Nowadays, companies can order that motor vehicle report to look at your driving history.
Mm-hmm.
They can order your prescription check. They can order your MIB, your Medical Information Bureau, which means if you've gone out there and done any kind of other applications for other
Right.
insurance out there, they can
Right.
see what other companies have rated you.
Right.
But all of that data can be gathered with your approval, of course.
Understood.
All of that data can be gathered in just a matter of minutes because of the electronic processes.
All right, so let's scenario this. I'm a person reasonably, pretty healthy, don't have a lot of prescription history. Now, if I take, Prevacid or antacid, that's not a mortality.
No.
Right. I haven't been denied or rated by any other insurance company. Don't drive like my wife drives with the speeding tickets. I've just ran a reasonably contained life with my health and everything. And I need more than 400,000, or I think I can get a better rate, but I'm busy. Jay, literally, I am very busy, and you are too. I'm busy. I don't want a. And plus, so I've had clients. They don't want a nurse coming to work. It's a little awkward, right?
Right.
So I'm busy. Don't really care for needles. Don't really go to that trouble. What options? I mean, how much can I get? Can I go up to $1 million?
You can. You can go up to $1 million of coverage, and you could qualify for the absolute best rates in the insurance industry. With
hold on. Best rates being the same rates I could get if I was fully underwritten the whole thing.
Correct.
I could get those. Some call it select preferred, some call it best preferred.
Yes.
I have the ability to do that without lab work up to $1 million.
Yes.
All right.
With about 10 different insurance companies today. And that number is just growing.
That number is growing because it's the wave of the future.
And we want it that way. We
Right.
want competition in the marketplace because you don't want to pay a whole heck of a lot of money for coverage to protect your family in the event of a premature death. You want to get the best deal you can, right?
That's right.
So if you're comparing two companies that offer a jet issue program, it's better to have comparison of 10 different companies.
No doubt.
Because rates change about every 3 to 6, 8 months as we have new mortality tables come out. Several years go by and a company will change their rates. Now we got a more competitive product landscape.
Well, the rate of change, as we've seen with everything, is accelerating.
Yes.
So I'd imagine the amount of data that they are collecting on the actual cases. So what would be, we've laid out what would allow someone to qualify for something like that. What are some things that would be like an automatic knockout?
Okay, so I brought with me some major medical conditions that would be a challenge for somebody to go through and get what we call accelerated issue. So
is accelerated issue same as jet issue?
Accelerated issue, jet issue,
okay.
They all have the same connotation. These companies are just coming out with different terminology to kind of make it their own.
I would like to say jet because I have a hard time saying accelerated.
Accelerated, jet, how about no blood, no urine, very competitive rates up to $1 million.
Love it.
All right. So what we're looking at here is knockouts. Knockouts such as alcohol or drug abuse history, issues with rheumatoid arthritis, issues with disorders of the muscles. So you think about muscular dystrophy, Parkinson's, bipolar, ADD, ADHD, anorexia issues, weight loss, weight gain issues. Then the big four I already talked about: cardiac, heart, cancer history, stroke, diabetes. A few other items like sleep apnea and esophageal issues, those can be knockouts.
All right.
But you would ask your insurance risk management professional or somebody like yourself, hey, I've got this going on, can I still qualify for jet issue, Josh? And Josh, you would then go look at the different companies' laundry list of knockouts. Doesn't mean they can't get preferred best.
Right.
It just means they can't go through and do it without a traditional paramedic exam.
Well, okay, so let's talk about the examples that I've already used.
Yeah.
I've done roughly half a dozen. I think 4 of them just flew through beautifully. In fact, you and I talked. One of them was just a matter of days. I mean, it was really incredible. But on the other 2, it wasn't. When we say knockout, we want to make sure we're clear. We're not talking about denial.
Correct.
Yeah, we're not talking about you're being denied on insurance. We're talking about basically you're running in a path of no exams required through the underwriting, and there's something maybe pop up that knocks you out of the flow stream and puts you just into
traditional underwriting.
Traditional underwriting.
And then they would then say, hey, we need a paramed exam on this particular case.
Right.
And then you would still go down the path of hopefully getting a very competitive rate.
Right.
But because you have this little chink in your armor from health history or whatever, maybe you're free and clear now. This is going to require that paramed exam. Doesn't mean you can't get what you were looking for in the first place.
And one of the, without getting into specific companies, but one of the benefits of even diving a little deeper on that is, let's say that, because I've had folks get surprised at some of the lab results.
Yeah.
One of the difference when you work with a broker type of arrangement versus an individual captive or single company is the fact that what happens if you get somebody rated? What's the first thing your company does with that case?
The very first thing we do is question what the issue was.
Right.
Was this something that we were aware of or not aware of?
Right.
If we find that we were not aware of it or the client was not aware of it, we will immediately advise them.
Right.
But then we also look to see if we can get a better offer somewhere else.
Bingo. Yep. Because insurance companies are competitive.
They are.
Yeah, absolutely.
And certain life insurance companies have different risk they're willing to take.
Okay.
Some companies are more aggressive with cancer.
Absolutely. Some don't mind cigar smokers.
Some don't
We've
mind
dealt with
cigar
that.
smokers or tobacco use. You can
Right.
still get non-smoker rates.
Right.
Some don't mind the fact that you've got a little bit of cardiac history.
Right.
As long as you're in a healthy lifestyle now, then
Right.
they're going to give you a the competitive rate that they can offer based on their underwriting manuals.
All right, so let's sum this up, because I've got one thing I think is really cool I want to talk to you about. So traditionally, if someone wanted to avoid the exams, the needles, the things of that nature, either they were offered some coverage through work, which generally speaking would have had some a little bit of a limit to the amount of coverage, and they would have been in at least somewhat of a pooled type of pricing structure, right? Let's say they didn't have that, or they wanted to supplement that, and again, you put in the fear of, or not the fear, but the fact they just don't want to mess with going through the blood draw and the urine and all that. Then they have simplified issue options.
Right.
Again, but that takes you up, generally speaking, I'm sure there's people watching this can go a little higher, but the companies that we represent can take us up to $400,000
Yep.
on individual simplified issue.
Right.
Again, you avoid, it's like buying the milk at the gas station versus the grocery store. It's still a gallon of milk. You just pay a little bit more for the convenience.
Right.
Now, and it's become, as you know, I've been doing this almost 9 years. This is something that I've really dived into the last 6 months. Of you've got a reasonably healthy person, you know, with prescription history, things like that, no prescription history. They have the ability to go up to $1 million in what I'm going to call jet issue. So you don't have to hear me stumble over accelerated. But they can go into jet issue and they can get up to $1 million, and they can get the top preferred rates if they qualify.
That's correct.
Or worst case scenario, they just go through regular underwriting.
Correct.
And worst case scenario on that is we have to shop rates.
That's right.
I mean, literally, I've seen cases where I can tell you that dealing with companies I deal with, they're not going to give up until there is literally no way they can cover them, and that is so rare. Most people don't realize that.
Yep.
They think that, well, I had that, you know, lump removed 5 years ago, no one will ever cover me. That's not true. You know, I think one of the good things that has happened with the spread of information via the internet and via technology is people realize we're all a little dinged up in some regard.
That's right.
Right? And the insurance companies realize that as well.
Yeah.
So go ahead. I'm sorry.
Well, I was going to add, gone are the days of finishing 18 holes of golf and having cardiac arrest on the 18th green. They're
Right.
going to resuscitate you and get you back up and into the workforce. Because
Well,
we want you working and we want you taking care of your family.
People like my wife with her CPR training.
That's right.
And her AAD. It's amazing how many lives are saved with that shameless plug. Jen.
So people are living longer. Our medical technology is helping that
Right.
as many issues as we can. And when we have longevity on our side, that helps mortality rates. Mortality rates is how the insurance companies price the product,
Right.
and the pricing of those and those rates drive the underwriting. They
Right.
want to be able to cover you, and they are a lot more comfortable today with a lot of situations than they were 10, 15, 20 years ago.
Almost, you know, what's funny is you and I have done a video on long-term care and extended health events. It's almost been an inverse relationship to a certain degree.
That's right.
You know, where they thought, where in life insurance, they thought that we were going to, like we joked about, retire at 65, drop dead at 70.
Yes.
Well, when you price that in a life insurance example and everybody started living to 80s and 90s and whatnot, it really helped drive the rates down. Conversely, it kind of dinged up the long-term care rates. We talked about that.
Well, you got to go watch that video to have that long-term care.
Yeah, that's right. Yeah, it's an excellent video, by the way. All right, so now I don't want to get too situational, but I feel like you and I are kind of on that perfect teetering point of technology where the people younger than us are really in tune with apps, with technology, with information flow, with monitoring. That's information about the outside world themselves. Let's say I've got somebody that comes in and is pretty tuned into technology, maybe does the Fitbit kind of thing, a Fitbit person, and they're healthy.
Yeah.
And they are super competitive. I mean, on their weekends they're going and doing the Ironman stuff and all this. I don't want to get too specific, but you're painting a picture.
Right.
That person comes in and they say, I want the most competitive rate possible, and I want to be rewarded for this lifestyle that I live that is healthier than the average American. What do we got there?
So 3 years ago, one specific company, John Hancock, they came out with a program called Vitality.
All right.
Vitality says we're going to let you accumulate points based on your activity, your health, and your overall monitoring of that during your policy year. And if you bought a 20-year policy, then you'd have to have those points each and every year for 20 years.
All right.
They have different levels you attain. If you can attain those different levels and the highest levels, they will give you savings off of your next year's premium.
They'll take premium off the next year.
That's right.
Now, when you say monitor it, is it, do I got to go around and write down, okay, I did 10 push-ups today?
Well, no. I mean, don't we carry these devices with us that track our steps?
Oh.
And we have, scales in our homes now that can tell us how much we weigh, and it'll talk to our apps.
Yes.
We can get our blood pressure checked, and we can put it in the app. The Fitbit you mentioned, people are wearing the devices, the wearable devices, to count their steps when they run, when they walk, when they bike. The Apple Watch,
right?
I wear an Apple Watch so I can track my activity because I'm I'm always on the go.
Right.
I like to be able to get rewarded for that activity.
Right.
So when we have these wearable devices or use our phones for that tracking, it makes it real easy for companies that offer a program like that. So specifically John Hancock offering Vitality, it makes them real easy to engage in that program.
And all this stuff, there's an app. It's all downloaded. I mean,
there's always an app.
The only responsibility you have is just go, like Nike says, just do it.
Yeah, you just log in, engage, and go about your life.
That's incredible. Now, if they can ever figure out a way to monitor the amount of yapping that this jaw does,
that's right,
and that drives my rate down, I'd pay nothing. They'd pay me to have life insurance. So, all right, I think we've covered is there anything that we are missing with regards to
No, I mentioned about 10 companies today that offer a jet issue or accelerated issue type of program. That number is just going to increase.
Right.
What you want to do is make sure that if you are in a need for your family, your business planning, if you're in a need to have more coverage, additional coverage, if you don't have any coverage now and you know you need it, you need to start having a conversation with somebody like yourself and go through that whole pricing, needs analysis. What do we need for our plan?
Right.
Just know that if you want a simplified process, it's now available. If you want a quick and easy and painless attempt to get your coverage and your protection, it's now out there and it's represented by multiple companies, which helps us get more competitive pricing so that we're not paying an arm and a leg for protecting our family or our business.
And if you're already somebody that is monitoring your health already, why not leverage that to your advantage?
That's right. If you're doing the workouts on a regular basis, or you're riding the bikes, we can even use it with people who don't go out and regularly participate in an activity. Right. You can actually have zero activity in the tracking, but as long as you're going to the doctor regularly, the dentist regularly, and you're maintaining a good, healthy lifestyle with eating and balanced nutrition, they reward you for that.
Oh, you don't even have to go run half marathons.
No, you don't have to do that at all.
I didn't know that.
Yeah, as long as you're monitoring your health and telling the app that you're doing so, they're going to reward you with points, which result in lesser premiums down the road.
All right. So, folks, what you saw today are some of the things that we are doing at Gulf Coast Financial Advisors to become more efficient and more effective at answering and covering these needs that people have. What you saw today is yet another example of the fantastic job that Jay Stubbs does with First Protective in helping guys like me navigate this enormous amount of information. I would not have known about some of these programs if you had not brought it to my attention several months ago. And in my opinion, it's given me a cutting edge when I go down and sit with somebody. I have things in my toolbox that most people don't.
That's right.
So if you're interested in hearing more, you can reach out to me. There'll be contact information at the end of this video. Josh Knoll, Gulf Coast Financial Advisors, and
Jay Stubbs with First Protective, here to serve professionals like you in the risk management planning and overall financial planning industry.
Well, great job. Thank you all very much. We'll see you again.
Have a good day.
Thank you for listening to Focus on the 5. If you are interested in learning more about Josh Knoll and Gulf Coast Financial Advisors, you can find us at gulfcoastfa.com, call 251-327-2124, email josh.knoll@gulfcoastfa.com, or message us on Facebook. Focus on the 5 is produced by Josh Knoll of Gulf Coast Financial Advisors. Advisory services offered through Investment Advisors, a division of Pro Equities Inc., a registered investment advisor. Securities offered through Pro Equities Inc., a registered broker-dealer and member of FINRA and SIPC. Gulf Coast Financial Advisors is independent of Pro Equities Inc. Information presented is for educational purposes only and is not an offer or solicitation for the sale or purchase of any securities. Focus on the 5 offers commentary and generalized research, not personalized investment advice. Show content is for informational purposes only and does not constitute a complete description of our investment services or performance. All investments involve risk and unless otherwise stated are not guaranteed. Be sure to consult a tax professional before implementing any investment strategy.